Hey guys, welcome back to my weekly options video series where I'll be sharing with you my options trading game plan for the upcoming week. If you're new to my channel, I post my game plan videos every Sunday, so be sure to subscribe to my channel if you don't want to miss any of the trading opportunities that I'll be sharing. Once again, if you're new to trading options, I would definitely recommend you to start paper trading using the Thinkorswim platform first. I hope you'll find today's video useful. As usual, I'll start off with a quick recap of the trading opportunities I talked about in my last video, so let's get started. So coming back to my Excel spreadsheet, not a very good week for my portfolio this week. So quite a number of stocks in the ARK ETF actually sold off pretty significantly this week, and I ended up closing off some of my positions as well because they broke some of the key support levels. I'll start off with Nike first. So for Nike, I was originally holding a diagonal spread position. My short call was expiring on the 7th of May, and I decided to roll my short call on the 6th of May, which is Thursday. I rolled it to the contract that was expiring on the 21st of May, which is 2 weeks out, strike price of $139. So prices on Nike actually shot up quite significantly on Friday, which is the 7th of May. Later we can take a look at the charts. So for a brief moment on Friday, prices actually shot past the $139 mark, and I decided to take profit on Nike simply because I was a little bit cautious of how the market is going. I do expect some form of pullback likely in the next week or next couple of weeks, so I just didn't want to take the risk and I decided to take the profit off the table. So I'm out of my Nike position for a profit of $543 within a short span of less than a month. So still a very good run, I would say. So if you take a look at the charts of Nike, you can see that on Thursday, this was when I actually wrote my short call, but unfortunately prices shot up on Friday. Still a good story because my long call actually ended up making more money than my short call. So I actually closed my trade on Nike for a profit. So coming back again to my Excel spreadsheet, I did close off quite a number of my other positions as well. I closed off my Zoom position, my Plantier position, and my CRM position for this week, all for a loss. And because they broke the key support levels, and I just want to stick to my trading game plan. So for Zoom, I closed off my position on Wednesday for a loss of $1,439. For Plantier, I closed out the position on Friday for a loss of $574. For CRM, I also closed off the position on Friday for a loss of $1,029. So this is a no regrets decision because they already broke past my key support levels and I want to stick to my trading game plan. It was quite unfortunate for all three of them to exit at the same time this week. So if you take a look at the charts of the ARK ETF, you can see that prices have broke past slightly below the 200-day moving average, and now it seems like it's struggling to find support at the $110 price level. So not exactly sure if in the coming weeks whether this support level will continue to hold, and probably that's one of the reasons why I decided to exit my Plantier and my Zoom positions because I just didn't want to take the risk. So let's see how this goes moving forward. Coming back to the last stock on my portfolio, that will be Disney. So no action on Disney this week as my short call is actually expiring on the 14th of May. So I didn't take any action for my short call. So for Disney, they will be releasing their earnings result on Thursday, 13th of May after market hours. If prices shoot up before that, I might decide to close this Disney position just because I don't want to take the risk. In case the earnings doesn't turn out to be a good one, prices will nosedive again. So let's see what happens next week then. That's it for my portfolio for this week. Let's move on to the opportunities for next week. So moving on to the opportunities for next week, I actually only have one opportunity to share with you guys, and that will be for Walmart, ticker symbol WMT. So this is purely an earnings gameplay. For Walmart, they will be releasing their earnings on the 18th of May before the market open. So I've actually already entered a double calendar spread for this on Friday. So if you guys have been following my channel, this is the other strategy which I use pretty often and I like it a lot. So for Walmart, the double calendar spread, if prices fall within the $132 price level and the $150 price level before their earnings are released, I get to keep a quite decent profit, I would say. So if you take a look at the P&L chart for this particular position, I've actually entered a total of 20 contracts. So my max loss for the trade is around $1,020, I would say. And this is the pink line is actually the P&L line on the 17th of May. And you can see that if prices fall within this $132 price level and $150 price level, I get to keep a certain level of profit depending on where the prices are. So the key thing to note for double calendar spread is that you need to actually close this position before the earnings are released. Otherwise, the volatility crash will actually destroy and wipe out this entire earnings over here. So the good thing I really like about the Thinkorswim platform is that you can actually visualize your trade entries, and you get to see how the different prices or how far when or the date changes, or even if you change the volatility, how would that affect your P&L. If you take a look at my Excel spreadsheet, so that's the WMT trade over here. I entered it on the 7th of May. So for a debit of 51 cents per contract, I entered a total of 20 contracts, and I will definitely close before this position before the 18th of April, before the market opens. So I have to close it on the by the 17th of April. So this is another trade that I use pretty often, double calendar spread, and hopefully this will make some money to make up for the losses for this week. So as I've mentioned, I do expect the market to pull back or in the next couple of weeks at least. And just to be on the safe side, I don't think I will be entering any new diagonal spread positions until that correction has been done, just to be on the safe side. Sometimes not trading is also a position by itself. So that's pretty much my trading plan for next week. I hope you have found this video useful. If you have any questions or suggestions, feel free to leave them in the comment section below and I'll try my best to answer them. If you're new to my channel and enjoyed watching this video, be sure to subscribe as I post videos like this every Sunday and sometimes on Thursdays as well. Happy trading and thanks for watching.